What's going on, guys? Welcome into another Wealth Building Wednesday. We got some exciting updates for you guys. There's a lot going on right now.
Oh, yeah.
There's a lot going on right now. Hey, do you like my money tree?
It's a bamboo plant, man.
It's the money tree. Come on, man.
Money. There's an actual thing as a money tree.
Yeah. Well, this is supposedly the prosperity plant, bamboo.
I'll take the prosperity plant. I mean, pandas like it, so what?
That's what I'm saying. If you are new to the show, welcome in. Be sure to head over to go.millionairemindcast.com to enter our monthly contest and giveaway of over $1,100 in prizes, planners, courses, books, gift cards, coaching calls, all kinds of cool stuff. Also, if you haven't texted us yet, text 844-447-1555. And if you want to know about our upcoming wealth camps, dude, we are live.
We're live.
So many people have been reaching out and asking about the wealth camps, and these aren't big, conferences and events. These are intimate retreats that are all focused on wealth building. Of course, your financial plan, your cash flow plan, your net worth plan. But we're also at these retreats doing some luxurious 5-star experiences.
Yes.
We got some. I'm excited.
Oh, I
We
know.
went through the agenda yesterday.
Did you get the menu that I sent you from the private show? Oh.
Yes. Oh, you naughty man. Come on.
Sorry, I'm just dropping a nugget out there.
If you guys want more information, text the word Wealth Camp to 844-447-1555. One word, Wealth Camp, and it'll send you the link for more information. Again, we're only going to have 8 to 10 people max.
Yeah.
Being that one, we are putting on a true 5-star experience.
Yes.
And we're going to be doing a real deep dive workshop on wealth building, on your financial plan, customized to you. So this is, again, why we're doing it intimate is because it's going to be customized. It's not going to be something that is going to be generic to everybody. We're digging in on your personal wealth plan, and we're going to be having a whole lot of fun in the process of doing that. So we got some really great stuff lined up for you guys. Really excited to be hosting our first one in beautiful Lake Tahoe. So if you want more information, just text the word Wealth Camp to 844-447-1555. All right, let's not waste any time. I'm going to actually pull up on the screen here. And if you guys aren't following us on YouTube yet and watching this video, feel free. You can watch this live on YouTube, or not really live, I guess. We're going to actually start doing
it live on YouTube.
It's like
if you want to watch this recording live on YouTube.
Hey, you never know. Watch party.
That's not totally wrong. I mean, they would be live and direct.
You can head over and just type Millionaire Mindcast in, and you're going to see our Wealth Building Wednesday episodes up on YouTube. And we're actually going to be starting to stream these things so we can get some live this time.
I mean, we record live.
Q&A. Yeah, absolutely.
It's going to be the same show, guys. Just so you know, we do not write anything. I show up, I have a cup of coffee, and then we sit down and record, which is why the show is probably so easy to listen to, because
it's not scripted, that's for sure.
Yeah. We
like to have fun. We're talking current events, and we're ultimately, responding and assessing and analyzing what's going on in the markets and how that impacts you and your money journey. So with that being said, bro, what's been going on in these markets, man?
Hey, whatever goes up must come down.
This is Wall Street Journal's front page article. Stocks revive after Dow's worst day in 12 years. Was it worst day in 12 years or ever?
No, the worst day ever was like 21% in one day.
Okay.
I think that was like in the 50s. Don't quote me on that, guys, but I believe it was. Not the I think this was like tied with the worst day in 2008. So, I mean, exactly on par. 7.4 is, I believe, the published around that drop.
So what happened yesterday? Obviously over the weekend, I'm scrolling, I'm laying in bed, and I'm watching OPEC and Russia and Saudi Arabia and oil just dropping through the floor. What the hell happened there? Why?
I will be honest with you. I am so busy was so entangled with the coronavirus stuff. Our analysts have still got some reports out. I haven't read them yet.
And this is on oil?
Yeah.
Got it.
Yep. But I will say it's, that part of the world, there's a lot of, how do I say it, political stressors that can kind of go on, especially with the conflicts that constantly go on over there, especially with Russia, especially with Saudi Arabia, especially with Syria, all that stuff.
Yep.
So, and for the past couple years, there's been a lot of volatility in the oil markets because prices have been kind of pressured to be so low, and they've kind of wanted to go out. We are moving into the summer months, which is normally the time when oil prices go up a little bit.
You think that's going to be the case with what's going down right now?
I don't know. They'll definitely go up again because oil is still a viable commodity for probably the next 100+ years. But I really don't know. That's a commodity. The commodity markets is not something that is we don't trade it very heavily, and we're mainly sticking to equities, fixed income, and then alternative investments. But normally we stay away from commodities unless it's like a commodity ETF. So I don't want to touch on something that I'm not the expert in. But I will tell you this: last year we saw a huge run up in oil, and then this year we're seeing kind of a snapback. It's kind of moving in par with the market. Obviously, oil took a way bigger dive than the market did. I think it was down 31%. But I don't think it's something to really worry about. I think what you should notice is your gas prices are probably going to go down a little bit. So it's honestly, I don't think people really care so much about that unless you're heavily invested in oil.
Unless you live in Texas.
I was going to say, my listeners in Texas, and I was talking out there about a week ago. Yeah.
About a week ago. Yeah.
I was out there speaking to some real estate investors, and I was like, hey, just so you guys know, when the oil market is down, you should know that's linked about indirectly and roughly to 10 to 15% of your property value, because Texas is so big, oil is so big in Texas. Mm-hmm. Also, one of the big reasons that the endowment fund is so big there is because they have oil.
Yep.
So when the price of oil is down, it's not good for concentrated areas that have large holdings in that spot. We don't normally have that, and socially responsible investing or environmentally responsible investing is becoming more and more popular. So I think less and less people are holding individual oil stocks. But that being said, Chevron, Shell, BP, Valero, Patron, all the oil companies took a major hit yesterday.
Yeah, so I saw some already headlines coming out about layoffs happening potentially with that.
You saw South by Southwest laid off about a third of their full-time staff because they had to cancel it.
Yeah, one of my buddies who's tied into the Economic Commission out in Austin said that $400 million in profit wiped clean.
I know. It's a great time to travel there right now. I was looking at it and I was like,
yeah. Interesting, for sure. And then obviously, there's a lot of anxiety for people around coronavirus, and, we're starting to see schools get shut down. We're starting to see, not just in the U.S., but globally, right?
Yeah,
Italy locking down their entire country practically.
Italy's not playing games.
They're not playing. Iran has obviously got a lot going on out there with many, layers to what's going on with them. We got South Korea being it's just globally a lot of people, and you're one of your favorite economists. What's his name? Mr. Doomsdayer, which I know you want to go after this dude. Nouriel Rubini, who's a big bear. They call him Dr. Doom or Mr. Doom.
He's a big bear.
He's a professor out of NYU, and he's always kind of been Mr. Doomsdayer, very bearish, but he's talking about, hey, this coronavirus is going to be a big catalyst for tail spinning the economy into a recession and a global recession, not just U.S. Mm-hmm. He's talking about big time. One of the variables and catalysts for this in the U.S. being consumer and business credit. Get us up to speed. I know you've been really digging in on the coronavirus. Your team, your analysts have been tracking this very closely. You guys have been making adjustments, proactively. And I'm curious where we're at right now based on your insights.
The thing that I would say, there's, a bullish investors, which I would consider myself a bull, and there's bearish investors. And it's the thing that we always revert back to is there's always more bull markets than there are bear markets. So I inherently am going to be more right than a bear just because that's naturally how it works. Everybody has their day in court though, right? The thing that I always and consistently say is a lot of people sell fear in a lot of areas, and fear is easy to sell because it's cheap and free, and it pulls on your heartstrings. And so that's one of the reasons it's used. So, and think about it. Who did they make the movie about? The Big Short, the guy that was going against the grain and this and also everybody's just trying to be their next, everybody wants their next day to be that guy.
They want their next movie.
Yeah, but the thing that's not talked about is, the people that make the big moves, like, Obama even said in March of 2009, hey, this is probably the bottom of the market, and it pretty much was. And so that was a really good call. Nobody ever talks about that. Nobody ever talks about the fact that, Warren Buffett bought $917 million of Delta Airlines stock throughout February when the market was tanking. So here's what I'll tell you guys. When the market's down, people that are saying, I told you the market's going to be down for the past, what has it been, 11 years, and it hasn't been? They've been wrong for 11 years. So if you want to listen to somebody that's right once out of 11 times, you'd be a shitty baseball player. At least when you talk to a normal, level-headed economist who understands that there's pullbacks and any type of pullback is surmountable. You saw my quote that I posted yesterday. As long as you stay fully invested and you just continue on your path, not only will you have more money than when you began this downturn, you will long-term build your wealth far above and beyond somebody who is sheltering themselves from the inevitable pullback that it has to happen. So, you have to change the tires on your car. That doesn't mean every single time you back out of your driveway, you're like, oh gosh, I hope I don't go bald today. You just, it's inevitable, and you deal with it when it happens. So that's why when you talk with your advisor, you make sure you understand your drawdown risk. You understand how you're invested. You understand what you are doing, what you are paying for. And as long as you understand that stuff, volatility in the market's not crazy. I don't even want to say it, but I mean, seriously, none of my clients have called to sell their position. We have had no calls.
Well, you would hope not, being that unless you're retiring tomorrow, you shouldn't be selling anything, right?
I have people that retired 2 months ago. They ain't calling me. In fact, I just made camping plans with them. They're calling me to figure out camping plans.
They want to come hang out with you, man.
Yeah, dude, I hang out with my clients.
Thank you for making me this money, Mr. Brigwell.
So advisors, if you're listening, stop selling performance. You're going to shoot yourself in the foot. Don't tell somebody you're going to make them 10% a year, because you're not. And you're not going to. The second you make them 9, you're a liar. And the second you lose them money, it causes widespread fear and panic selling. That's an indicator that people don't understand what they're invested in. Mm-hmm. So that's why I go above and beyond with the people that I work with our listeners that we talk to. What are you doing? I cannot tell you how many 401k reviews I've done, and people are like, well, I don't want to move anything or pay. I'm like, you ain't going to move anything or pay me anything. I'm going to tell you how you're invested and how to improve that. I'm going to tell you, this is going to be more aggressive and it's going to be down more, but you can't touch the money for 32 years anyway.
Yeah.
So who cares?
Yeah.
So a lot of I digress a little bit, but everybody has their day. Mm-hmm. So I don't want to, I would say he's much more educated than I am. No doubt there, has a lot more experience in the market. But I guarantee you, if me and him invested, I would just make more money, because he would be constantly buying puts and shorts on the market and betting it's down, and most of the time being wrong. I would simply just buy like the market was going to be up, because most of the time it would be. Mm-hmm. And I'd argue long term, even in a down market, I would still have more money than that gentleman. So staying invested, big deal, guys. So, one thing that I would highly recommend is, if you are nervous and you cannot handle the red, just don't log into your accounts and look at it. Don't watch the news for a couple days when the market data comes up, because all they're doing is trying to get you to watch or click on an article so they can make money off of you. 5,000 plus people died last year from influenza. Nobody wrote an article about it. I definitely didn't go buy no hand sanitizer. Campbell's soup wasn't stocked up in my fridge. Toilet paper didn't get bought up. Y'all need to chill.
Yeah, a lot of people are freaking out right now. And
yeah.
Emotion drives markets, that's for sure, right?
Yeah. No.
Which it shouldn't.
Yeah.
It should be all...
Not with our clients.
It should be all head. Should be all data. Mm-hmm. Should be all logical, emotionless decisions when we're talking about investing. So Be careful out there, guys. I think if anything, I'm definitely not a conspiracy theorist, by any means, but there's just been a lot of volatility. There's been a lot of stuff going on that I guess for me it's asking more questions and saying why.
It's an election year,
What
guys.
don't I know that may be impacting what we're hearing and what we're seeing right now? And I'm not saying any of this is false or farce, and we shouldn't be taking it at face value. But at the same time, I take everything with a grain of salt, right?
Yeah, I take it with a bucket.
So with that being said, we said we would provide a little update on our friends. Robinhood.
Yeah, they this is.
Did they crash twice?
They've crashed twice now.
What does that tell you about their platform?
You know, guys.
What should people be paying attention to? We had a couple of people reach out about this.
Yeah, here, I'll give you guys a hint. You get what you pay for. When you pay nothing, you get the service of paying nothing. So I just, discount. When you use a discount realtor, you're going to get discount service. When you use a discount investment advisor, you're going to get discount service. When you use a discount, you're going to get the discount, which is there's just less money to guard against that kind of stuff. I don't think people really equate. People are so, which is why food quality is so crappy in the United States in a lot of areas. People are so driven to get the cheapest with the largest quantity. All they want to do is not pay any fees, and literally they could pay like $1 a trade, and then they would have all these protections, all of this robust technology, and they would rather trade on a silly little platform that's an app. And like I'm not saying that Robinhood did a lot of good for MySpace. Not MySpace, sorry Tom, for my world. It made it so most of the big players got away from commissionable trades, got away from trade fees. Charles Schwab likely progressed to purchase TD Ameritrade quicker than they were or maybe considering because of that. So there was a lot of things that Robinhood did good, but I think that they're going to need to really figure out what's going on with their management and how they're going to be viable when they are this big. The bigger you get, the harder you can fall. They're going to have lots of cyber attacks. They're going to have people constantly that costs money to do. So that the margins are going to get thinner and thinner off of already what they're making nothing. Something's got to give. I don't really know what, because I don't run a no-fee business. So I have no idea how it's going to work. But I would caution everybody, you can buy all the same stuff on Charles Schwab, on TD Ameritrade, that's the custodian we use, who's now owned by Charles Schwab, Vanguard, E-Trade, Interactive Brokers, and they all have an app too. And you guys would be really surprised how much more stuff you'll get, how much more info you'll get, how much easier the apps are to use, how much more support you'll get. I mean, Charles Schwab will try to have their professional traders, when you make a buy, hold options on it so they can save you even more money on it. I mean, it's a whole nother world. So I would, when I buy my clothes, for example, I don't buy the most expensive designer clothes by any means, but I have my clothes for 7, 8, 9, 10 years. And the reason is their quality. Mm-hmm. I paid a little bit more for them, but I can wash them a lot. I can wear them a lot, and they're not going to get holes. The stitching's not going to come out. And I would argue that you guys are shopping at Walmart for your jeans if you're using Robinhood. No hating on anybody that's doing that. I used to wear Rustlers as well. But you're going to get what you pay for.
Yeah, for sure. Well, let's look to the future a little bit. Mm-hmm. Pulling up some CNBC market data right now, pre-market data. I see a lot of green this morning.
Yeah, I think
what's your thoughts on after what happened yesterday? The Dow dropping 2,000 points.
Yeah, I mean,
what's your sentiment moving forward? What are you paying attention to this week? What should others be paying attention to? Or is it business as usual?
Yeah, business as usual. I mean, the only thing that I did differently is I hold my money, obviously, where our clients hold our money, and I just emailed our person. I was like, hey, can you increase my monthly contribution to my 401k?
Tell me more. Why?
Well, the market's down. And I'm a long-term investor, so I'm buying the same things that I'm going to be buying.
Buying on discount.
Yeah.
And you're saying in the overall, let's say, 20, 30, 40-year timeline before you go into retirement. You are saying, I'm buying at a low right now.
Yeah.
And in the long-term picture of this bell curve, it's going to pan out real nice for me.
Oh, yeah. And I'm getting dividends the whole time. And I'm increasing. It's just all gravy to me. So I will give it our REI people. When was the best time to buy investment properties in the past
2010, baby.
15 years. 2009 to 2011.
Yeah.
You want to know why? Because they were all on discount from when? 2008.
Yep.
It was a very bad time to sell, if you had to sell. But here, let me just give you guys another really quick reminder. When y'all bought your houses right before the market tanked, and then you went upside down on your properties and your mortgages skyrocketed, the only difference between you and the same person that put that same amount of money in the market is y'all had this. Let's say you lost 50% and 50%. Their fees don't go up. So just keep that in mind. Their fees didn't go up. That is when real estate becomes a liability. It's still an asset and a liability when it's cash flowing to you, but it's a pure liability when you're getting no cash flow off of it.
Truth.
So again, something we always talk about is a lot of people that come from the REI world are 100% REI, nothing else. A lot of people in my world are 100% traditional investments and nothing else. They can work independently of each other, but God, they work so much better together.
Yeah, and that's one thing I'm learning very quickly. I was doing my personal financial statement yesterday with one of my mentors, and we were going through all my allocation and my assets, and I have about 75% of my wealth in real estate. Mm-hmm. Thank God for people like Mr. Breedwell over here who's showing me the light. Yeah, and here's the thing is, like, again, it's not that one is necessarily better than the other, but together they become a juggernaut.
Yeah, and just because maybe one long-term makes more money doesn't mean it's always superior than the other, because that one, when it doesn't have its day,
correct,
the other one does.
Yeah.
So, and they just do they do a similar thing, but in a different way.
Yeah.
There's a lot of different ways to dance professionally, and they all look good, but it's all dancing at the end of the day.
Right.
We all drive an automobile, but there's trucks and cars.
Yep.
So there's a lot of different ways to do things, and when you have them working together, your wealth picture will explode. I mean, off the charts. And it's not going to happen overnight. And one of the things that's hard for REI people is you get a lot quicker upfront success with real estate investment.
Sometimes.
More often than you do in buying and trading equities.
Yeah.
But long term, you will get more from the equities. So when you blend them together, instead of having this ramp up trajectory and then a ramp down trajectory, you kind of smooth it out to this smooth, even ride all the way up the whole time.
Yeah.
So that's why they just work so well together.
A couple questions have been coming in about precious metals, and I'm going to pull this up on the screen.
We bought gold.
I was going to say, so this was a post from CNBC that Goldman put out saying it has, quote unquote, immunity. Gold has immunity from the coronavirus. Why'd you guys buy gold? What are your thoughts on this story from CNBC?
We only buy gold from my understanding in the reports that I read from our analysts, because people get scared and put money into gold. And why not ride the rocket while it's going up? Mm-hmm. And so we bought it a little over a week ago, and it's been going up every single since. I think it's trading for over $1,600 an ounce.
How long should someone hold?
It's so hard to tell. Gold sucks. Pays no dividend.
It's just a true hedge, right?
It's strictly a hedge, but again, guys, gold is poo-poo. It just is not a good investment. I'm saying that while we hold gold. So take it from the horse's mouth. We only buy gold because silly people buy gold, and it pumps the price through the roof. And then at some point, it's going to go right back down, and then it'll go right back up again, and right back down, and right back up again.
So are you guys going to try and sell it at some point in time?
Oh, not are we going to try. I'll hope. We are going to sell it. We do not hold gold for very long. I can't tell you when.
So you just buy in times of instability like this because it is steady Eddie.
It goes up.
Yeah.
And then once we see the VIX calm down and the volatility smooth out, we'll drop it. We won't try to find the top of it.
There we go.
And we'll go buy something else that pays a coupon rate or a dividend. Gold pays no dividend, and historically it has barely kept pace with inflation. I mean, barely kept pace with inflation versus more than keeping pace, total return at around right at 5% with a diversified basket of equities. So, like I said, you'll never get me on here saying, buy gold, buy gold, buy gold. But it's a good thing to hold temporarily.
Yeah.
I always tell our clients, if gold is ever a good thing to get, I promise you we will get it.
Yeah.
But we don't hold on to it forever. And that you want to talk about a liability, have $50,000 worth of gold in your house and let somebody that wants your gold find out.
Yeah.
I mean, geez.
I got a buddy who's literally got a safe in his house of over $10 million in gold bars in his house.
That's just stupid.
Actually, in his floor.
Yeah.
He had a special engineer come in and cut concrete into his slab, dig into it.
I think if you ask me that guy, I could probably look at him and be like, I think in your head up here, you have this scenario where it's going to play out to where you...
He's a doomsdayer.
Yeah. And
He's a doomsdayer. He really believes that we're going to be in for one of the worst recessions. It's going to create true chaos and havoc in the streets for quite some time. The hierarchies of society are going to break down. I mean, he's pretty...
He should be like a Hollywood director. That could make great.
He just got dual citizenship in Spain for him and his whole family. They studied for 6 months, had to take the test to...
So what do you think Spain is going to be the safe haven?
That's what he's betting on, I guess. We haven't actually had a chance to really dig into that, but let's shift gears for a couple questions here. This one from our man. I shouldn't even say this, but I'm going to say it because I just want to see what you have to say about it.
Oh, boy.
From Mr. Chris Stevenson. Thank you for your question, sir. You might get burned by Mr. Breedwell today. How do you find a solid financial advisor, and what are the best avenues that you use to find clients? Before you fly off the hinges, here's what I'll say, and I know you always come from a place of love. We've done a handful of podcasts on this, so be sure to circle back around on questions to ask your financial advisor and how to determine the best one for you. We actually have a full episode of Wealth Building Wednesday a couple weeks back on this. I kind of want to just answer it for you. Email rbreedwell at Capital Planning Group.
That would go to my dad. He'd got to do
okay.
Ryan Breedwell at capitalplanninggroup.com. Capital is spelled with an O. I mean, shit.
All right, how do you find it solid? Give me 3 quick. You're talking to your best friend's grandma, and and they want to know, how do I know if I have a good, solid financial advisor? How do I find one of these individuals because I'm not happy with the person I'm with?
First of all, make sure they are a fiduciary and only a fiduciary, not a broker. You don't ever want to work with a broker. You want to work with an investment advisor only. That can be found out on Broker Check. You can go to brokercheck.finra.org.
Great website. That'll give you that'll give you all the dirty laundry, or that'll tell you how Mr. Clean they are.
Yep. And if they're an investment advisor, it will redirect you to the SEC's IAPD, Investment Advisor Public Disclosure, which is where you will find me because I'm an investment advisor. Second, how are they paid? And how much are your total account fees? Not what are you paying your advisor. What are my total account fees? Do you charge a 12B1 fee, which is a fee to advertise for new clients? Do you charge me a commission? If so, how much commission? What's the fee that I'm paying you? What am I paying your investment advisor or broker dealer? What am I paying? What's my average expense ratio? Blah, blah, blah. You need to find those out. And third, make sure that they're not just giving you a cookie cutter mutual fund portfolio that your grandfather's grandfather would have used.
Which is pretty much what the masses of advisors will do, right?
Yeah, because a lot of advisors aren't advising. They're simply brokering a product. They just put on a suit and get a license.
They don't know any better.
No.
They don't play the true game and understand the real science at a high level.
Yeah, they just say, oh, daddy says to give you this because that's what I got on my report this week that we need to sell. because this is what my broker dealer, they're getting good kickbacks from this mutual fund company. So we need to sell this mutual fund so that daddy gets more kickbacks, so that my mutual fund company moves me up on the grid, so I get a higher commission rate. That's how the game works on the broker dealer side, guys. It's completely incentivized.
Yep.
Whereas when you're an investment advisor, a fee only advisor like myself, you just charge a fee, a flat fee. It doesn't go up or down unless your assets get bigger. It goes down. And you pay that fee. And guess what? How I make more money is by growing your account. That's the only way. So it's so far superior. And then we're actively managing, or we can do passive management. We can do individual stocks. We can do index funds. We can do everything.
Yep.
We literally just don't do 529 plans because we just don't do them.
Well, one of the cool things, this is what I always tell people. I refer all of my business to Ryan for one specific reason. Is I know that, one, he's an extension of me that I trust. He manages my money. It's something that he helps me, understand and educates me more on a daily basis. He's a true resource. And so I know that if I ever send somebody to him, whether it's now or in 10 months or in 10 years, he truly is going to consistently add value to that person, and trust that by doing that, he's going to get the business relationship because he's playing the long-term game instead of just trying to make a short-term transaction. Yeah. So I always feel confident that when I send people over to him, he does what he calls a financial x-ray and will legitimately look at your entire portfolio. I mean, it's amazing because this is something that his analysts and company usually charges $2,000 to $3,000 for Millionaire Mindcast listeners. If you guys reach out to him, he will literally have his team do this for you on your portfolio and not ask for the business. He just knows that by providing value to you and connecting the dots and understanding what your goals are and when you want to get there, that by helping you connect those dots, if and when it actually makes sense for you, you're going to look at him as a resource and say, this is the guy that's going to help me be the co-pilot in my rocket ship. I'm going to be steering, but ultimately he's going to be helping me follow the roadmap that we've laid out that helps me get to the destination I want. And that's different for everybody. So finding a great, solid financial advisor, I've had people pounding on my door for the last decade, at least since I started making money. Yep. And I've never found anybody like you, buddy. So that's that is a shameless plug for you because of you've earned it. It's what you do, and you're phenomenal at it. Shifting gears a little bit, I'm getting a lot of pressure. This is a great question from Mike Mello, and this is something we've seen in the have seen in the media, and have seen articles and topics come out on it around to buy a house or to not buy a house. And Mike said, I'm getting a lot of pressure from people in my life to purchase a house. I've read some articles based on buying houses being more of a liability versus an asset. Crazy. I was wondering like if he's listening to Grant Cardone. Wondering if you could provide more context and content on home ownership for the first-time home buyer, or is it better choice to buy an investment property and rent? It's actually a good question. I really do think it's a good question. I would say depending on where you're at in your life, Mike, if you can house hack and you don't mind having roommates, or you can get a duplex and rent out one side and it covers your mortgage, you can kill two birds with one stone. You can actually have home ownership and somebody else pay down that asset for you. And as you try and buy up or move out to, you enter a different stage in your life and you want to rent out the other side of the duplex or rent out the whole house, now you've already parlayed your home ownership into an investment property.
Yeah. And Jesus, take the wheel. The only person that I have ever heard say that you should rent and not buy a property is Grant Cardone. And I will tell you right now, that is one-sided information for that jackass to go buy a Rolls-Royce truck and drive it out on the freaking stage with his stupid-ass wife telling you about how he wants to 10x your life. Fuck that guy. If you rent somewhere, you are paying a mortgage. You're just paying somebody else's mortgage and lining their pockets with no tax deduction. Nowhere in the world can you prove to me unless you're doing here, let me back that up. There is a very, very, very specific situation, and it almost never exists, where renting and then buying an investment property can actually, on paper, net you more in a positive favor from net worth, tax benefit.
Agreed. Now, if you're being an idiot and you're going out and buying a $700,000 house
That's
when you
stupid.
could live in a $300,000 house, again, we're talking, don't make yourself
Don't
cash poor.
over-leverage. Yeah.
Don't be stupid and try and live above your means, right? But when we're talking about practical economics of buying a house versus renting, and you look at the true data and you look at the breakdown of principal pay down and you look at the true ROI on your dollars invested into that asset as it provides you other ancillary benefits and shelter, and you tie it into the lifestyle as well, and the value that it brings you in just owning your own home and the responsibilities that go along with it, that help you be a steward of your money, that help you be a steward of, financial investments. I'm going to say all day long, you should be buying a real estate property for your actual home.
Yeah,
I'm not going to tell you to go out and rent.
You could literally build up $80,000 of equity, take $50,000 out, and then go buy a $200,000 to a $250,000 investment property, and all you did is use the equity from your current investment while getting the tax break. Just guys, two things. One, if anybody knows Grant Cardone and his ass wants to get lit up, I am fucking ready. So I will fly out to your show.
I'll sign up for that.
Oh, yeah.
I'll sign up for that for sure. If anybody knows Uncle G, and don't get me wrong, there's a lot of stuff that I love about Grant Cardone.
Same.
There's a lot of things that I think he is a master marketer at and manipulator of narrative, and he gets you to, again, you have to look at the set of lenses he's selling things through. The dude is trying to become the largest apartment owner and fund in the entire world. That is his goal over the next decade. And if he tells you to go and buy a home and you put your down payment money towards an asset that benefits you versus you putting your money into a fund that benefits him, just take it with a grain of salt, right?
Yeah.
But at the end of the day, go back and do the research and compare home ownership to renting over the last 100 years, and the data will tell you what decision would probably make the most sense and long-term benefit for you. So we'll leave it there. Last question.
Dirty whore. Hit me up, bro. I'll be on your show, man. I'm not kidding.
Oh, you did say you had a nice pot of coffee this morning. This guy's fired up today.
If you want it, come and get it.
If you want it,
have your people reach out to me, man. I don't got as much money as you, but boy, I will
You're not far behind, my man. You are not far behind.
Come on.
All right, final question is from my man, Justin Wheeler, making one of my favorite quotes. Sending one of my you were laughing when you saw this morning. This is more of I would say an organizational and maybe educational question. Matty A, one of my favorite quotes is, "The dullest pencil remembers more than the sharpest mind." I love that quote as well. As life accelerates, how do you organize thoughts, important lessons, or valuable insights to revisit in times of need? This is actually something that I've been obsessive over the last decade, because I know that, I know where my weaknesses are, and I can barely remember what I had for breakfast 2 days ago, let alone what I read sometimes in a book or an article 2 weeks ago that were of importance to me, or what moved me, or what resonated with me, or what tactic strategy I learned at a conference or an event 6 months ago. So I am a big fan of Evernote, and I essentially will, and maybe this is another video that I will do to actually break this down for you guys and show a real-time screen sharing example of my Evernote on one of our YouTube videos. Essentially how I organize and archive and tag and categorize all of my notes. I do monthly notes, whether it's podcasts, conferences, events, articles, things of importance, and how I tag them, how I go back. My kind of cadence and routine of I revisit my stuff monthly and review, because a lot of this stuff is tried, true, and tested, whether it's today or 10 years from now or 50 years ago still makes sense. And those are things that you're obviously going to want to, make sure that you're consistently sharpening the axe with and revisiting. Then obviously there's, other things that you're going to be taking notes on. But I love Evernote. Evernote's great. Obviously, there's so many different organizational tools out there today. I think it's just finding a cadence that works for you and being diligent in how you sell yourself back an hour a day, right? That's what Warren Buffett always talks about. Sell yourself back an hour a day to invest in yourself.
It's super hard to do, by the way.
It is really hard to do, especially in the world we live in today. So I'm going to do a video on that. I think that's a good one. Thank you for asking that question, Justin.
Yeah, really good question, buddy.
And I think we're going to wrap up on this. CNBC talked about, will the coronavirus outbreak spark an economic slowdown? There's a lot of different catalysts right now that are floating around that could potentially put us into a tailspin and lead us to a recession. And they talked about these 5 potential recession triggers to keep an eye on. Number 1, U.S. consumer strength waning.
Next.
Small business confidence collapses below 100.
Not currently. Next. It's all the other 0 for 2. The economic reports are you both of those. Next.
Jobless claims climb about 250,000 or above.
That I will give some credence to. I've seen it bouncing. So the thing is, it'll be reported every couple weeks, and it's like it's down, up, down,
yep.
up, down, up, down. So it's kind of bouncing in this area, but overall unemployment is the lowest it has ever been ever.
Yep.
So
do you expect with, let's say, right, the oil market in Texas and some of these other, we're talking about the airlines, cruise ships.
Clearly, unemployment on the next report should go up, and that's an artificial blip due to the short-term volatility. It is going up, but those people are not going to sit on their hands and not go get jobs.
Yep. Okay.
It's not like 2008. This is not a financial crisis. You have to remember, a financial crisis and a recession are 2 separate things.
Yep.
A recession is simply a cyclical item that happens in the market about every 7 to 10 years. A correction happens about every 3 to 4. 20% for around 6 months is a correction or less.
And you've been talking about this becoming a correction, right?
Yeah.
Needing a correction. Everybody's been talking about it.
We do need it.
So not necessarily a crisis, just a correction at the moment.
When steak goes on sale at Rayleigh's, I don't freaking tell everybody to only buy chicken. It's a good time to buy some steak then. It's just everything adjusts in price.
Dude, your analogy game is on point today, brother.
To move items.
Number 4, lower U.S. mortgage activity. So the Fed, right, dropping rates.
I also have no idea where they're getting their data because maybe new origination may be down, but refinancing.
Oh, it's crazy.
That means
every mortgage lender I know is saying they're slammed with refis.
That means that what that means, guys, is that the amortizations are now reset for a longer period of time. Yes, at lower rates, but they just made all of that money, and now they're resetting it on a lower rate, but for an extended period of time.
For sure.
So it actually stabilizes the market by people refining because it gets more mortgage-backed securities out in the market at lower rates. It's a great time to consider a refinance if you are on the fence about it.
Yeah.
I do think that rates will continue to go down in the future. Some
people are saying it's going to get even lower.
Oh, for sure. There's
lower. That's
100% chance. Okay, 99.9 because I got to throw a little bit in there.
Come on, bro.
There's a 50 bip drop on the, what is it today? Is today the
10th?
Yeah. So next week there's going to be a 0.5 point drop again, and I'll even venture to say there's probably a 50-50 chance of a 3/4 point drop.
Ooh. Pay attention.
Pay attention, boys and girls. That low.
I like it personally. I mean, again, it doesn't necessarily it doesn't lead to a lot of confidence, but at the same time, I think it's them saying, "Hey, we're in this with you." Like,
well, the Fed, Papa Powell is over there just cutting rates.
Saying, "Yeah, we're in this with you. We're gonna work through these scares and these fears with you. Let's keep this train rolling, guys."
That at the same time, though, it does scare me though when the Fed is too aggressive on their cuts because then you run out of weapons.
Well, yeah, you can only go so far before you hit negative rates.
Yeah,
right?
And then literally once you hit negative, you never can go back positive. It's just look at Japan.
That's scary. Yeah, something to pay attention to. Number 5, likelihood of President Trump being reelected dipping. I thought that was really interesting, right? People betting with their pocketbooks saying it's not looking like Trump is got too much competition on the other side of the aisle. Depending on what side of the aisle you fall on, this is just an unbiased economic report. And
I heard the exact same thing 4 years ago, and we saw how that turned out.
So
I don't know, because although the market is down on a 4-year track, it's way up, guys.
Yeah.
So yeah, but the market went down at the beginning of Obama's term, and he got reelected, and he was a president through half his first. So I don't know. It's going to be a very close election. I think it's going to be between Mr. Biden.
Yep.
And
I don't know, dude. Sanders is.
Nah, I don't think that the DNC won't. They'll do whatever in their power.
Well, he's hiding underneath their. He somehow found his way underneath the Democratic Party, but I don't think they're going to endorse him. And you see a lot of people jumping on the Biden train right now. That's for sure.
Especially after Super Tuesday. I just don't think people.
Today is Super Tuesday in a lot I'm states, 6 other states, right?
The first one was in North.
I mean, we're the only Cali is Super Tuesday.
South Carolina?
I'm not even going to put my foot in my mouth, but I know we got 6 voting states today, so definitely paying attention to the election. And those 5 potential recession triggers: U.S. consumer strength, confidence waning, small business confidence collapses below 100, jobless claims climb about 250,000, lower U.S. mortgage activity, so that demand is dropped, and likelihood of President Trump being reelected. Pay attention to those things, guys. We're here to bring these topics of conversation to the table. You're always going to hear us look at not only both sides of the coin. We're going to stand on the third side and give you our opinion. Yeah, see, there's not just 2 sides of the coin.
You're right. I forgot a penny can stand up.
Yeah, that's right. So if you guys have any questions, comments, you're watching this on YouTube, drop a comment below. If you have a question for us, please reach out, head over to go.millionairemindcast.com, enter that question. You're going to get entered automatically into our monthly giveaway. And if you want more information on our upcoming Wealth Camp events, we have some really, really exciting details for you. You can get all those details. Again, I think we already have a handful of people. We just released them yesterday that have signed up, set up their discovery calls, and we are going to be probably capped here in the next week or 2. So be sure to check that out. And if you don't get this one, know that we have more coming up, world-class 5-star events to help you continue to build wealth on your March to $1 million and beyond. You can text the word Wealth Camp to 844-447-1555. With that being said, keep investing in yourself and your wealth on your March to $1 million and beyond. We'll see you guys in the next show.